if I were in charge, I would go to a private banking system and a monetary standard based on market criteria, which would probably be a gold standard. Not because there's anything magical about gold, but because gold is limited, it's hard to find, it's expensive, and it provides discipline. As long as we have a Federal Reserve, we're going to have a high level of government debt until we get in serious financial trouble. It's almost inevitable. If you look, governments have been debasing the currency since at least the Roman Empire, and even before that. And we have been debasing our currency, and we will get in trouble. If we don't go to a gold standard in a private banking system, then I think the Federal Reserve ought to have less power, not more. We ought to go with what Milton Friedman said and grow the money supply to fixed rate, like 3%, because every time they overcorrect, you don't know that the overcorrections happened until 2 or 3 years down the road, and we're looking at that same kind of risk right now with stagflation in the future. And then the other option would be the one I described before with more capital and less regulation, which is a very practical option and almost the opposite of the direction we're going now. With just plain more regulation, we're going to make the system more vulnerable, not less vulnerable. I think that the primary cause of the financial crisis was government policy. We don't live in a free market in the U.S. We live in a mixed economy. The mixture depends a lot on the industry. Technology is probably 80% free, 20% government. Financial services is 70% government, 30% free. Not surprising, the most regulated industry is the one that had the biggest problems. What happened is government policy created a bubble in the residential real estate markets. That bubble burst, which bubbles always do, and that got transmitted into the capital markets and into the economy in general. It is true that individual financial institutions made some really big mistakes, but it was in context of government policy errors. And the three big causes were, first, the Federal Reserve. In a certain sense, people don't, they know this, but they don't get it. The government owns the monetary system in the U.S. In 1913, the monetary system was nationalized. If you're having trouble in the monetary system, by definition, it's a problem of government policy. If interstate highway bridges were falling down, people say, well, what's wrong with the government? They own the highways. They own the monetary system. The Fed was created to take out volatility in the economy. What they've done is take out short-term volatility and push problems into the future. Because in a free market, as human beings, we're not omniscient. It's always in a correction process. Good businesses are growing, bad businesses are going out of business. If you take out the bottom side, you push the problems into the future. And then specifically, Alan Greenspan had negative real interest rates for several years. Bernanke created an inverted yield curve. Those are huge incentives for people to invest and take high levels of risk. We couldn't have had a financial crisis if the government if the Federal Reserve hadn't printed the money. The FDIC creates a lack of market discipline, where people like Golden West and IndyMac and Countrywide, all that fail, they can grow their assets, high-risk assets, very easily by buying deposits. And because of FDIC insurance, a typical depositor doesn't think about the risk in the institution they're invested in. And then it ended up in the housing market because of a goal really set in 1999 by Bill Clinton for Freddie Mac and Fannie Mae to have over half their loan portfolio in affordable housing. And so a lot of the bubble ended up in the housing market, and Freddie Mac and Fannie Mae would never have existed in a free market. They were guaranteed by the federal government. When they went broke, they were leveraged 1,000 to 1, and they had $5 trillion in liabilities. And politics played a huge role. I personally was involved in a committee trying to do something about Freddie Mac and Fannie Mae, because you could run the numbers and you knew they were going broke, but Congress wouldn't do anything about it because affordable housing was kind of a religious belief of Congress. And secondly, Freddie and Fannie were huge contributors to both Democratic parties. So yes, individual financial institutions made mistakes, but in the context of some really serious government policy errors.